Here again, bringing more information about what's going on in our season or tax season. As you know, we are servicing Central Florida with all real estate services. It can be your first-time home buyer, if you are a first-time home buyer, or you are an investor. So this information that I'm going to share with you is related income taxes. So remember, I'm not an accountant, but education is the key. So it's very important to know what we are doing and how we are doing, so we can take advantage of all different benefits that becomes available to us as a real estate investor or as a first-time home buyer. So I have 3 different items that you can deduct from your income taxes now that we are in tax season. So the first one will be the interest rate. The interest that you will pay during the year towards to your mortgage. So as you may know, interest rates are very low, but still you have to pay them. So if you have $100,000, $200,000, $500,000 mortgage, you receive already a 1098 from your lender telling you how much was the interest that you paid during the 2019 last year. So some people have $10,000, some people have $5,000 or $20,000. So remember, you can deduct all those interests from your income taxes. So how this works is, let's say you make $100,000 income on 2019. So, but you pay already $10,000 of interest, so you can deduct those interests from your gross income taxes. So that's a great advantage. So that would be the number 1. Now, there is a difference between your primary residence versus your rental properties or your investment properties. When it's a primary residence, you can deduct up to $750,000 of your primary home. So that's a big difference when you are an investor, because you can deduct all the interest that you pay during the 2019 year. You can have 1 property, or you can have 10 investment properties or 20 investment property. You can deduct all those interests from there. So that's a great advantage when you are an employee, because you can get all these discounts or those deductions from your gross income. Now, the second one, I very like this one, is depreciation. Yes, as the car can depreciate, you can depreciate investment properties. Residential properties, you can depreciate up to 27.5 years. Residential property, 27.5 years. You can depreciate that property. Very interesting thing is that you can depreciate the house every year, but in this market, every year is appreciating on value. So what more beautiful thing that you can depreciate a house on your income taxes, but every year increase of value? Yes, it's kind of funny, but it's a reality. And that applies only for 2 properties that you are rented, investment properties, not on your primary residence. So you keep that in mind. So if you want to deduct more money from your income taxes, start to invest, and you know who you need to call us. Now, the number 3 will be property taxes. Unfortunately, Uncle Sam wants a piece of that property that you have. So it can be your primary residence, or it can be your investment property. You need to pay property taxes, but the good thing is that you can deduct that as well from your income taxes. So right now, it's tax season. Keep all those receipts, all those bills available when you are going to sit down with your tax preparer, because you will be taking care of those taxes right now. So again, if you are an employee, what better to deduct as much you can from your gross income when you have investment properties. So take advantage of this, because that's the legal way to deduct your gross income. So call us if you wanted to learn more about this or other advantage to have a property, investment properties. So me or any of my team players can help you to start to build all your portfolio or start to own your first time home buyer. So give us a call, 407-913-9388, and this is LorePerdomo, and I will see you next week with more valuable information. Bye bye.